The Global X Lithium and Battery Tech ETF basically tracks global lithium miners and battery producers. It's a classic theme ETF in that it goes across a bunch of sectors, including chemicals, miners, auto, electrical, and has a variety of countries in there. Pretty big at 615 million, 75 bips, a little on the high side, but you know, for a theme that's pretty normal. Let's look at the holdings. And this is what caught our attention this week is Tesla. This is one of the ETFs that owns the most Tesla, number 3 here at a 6% weighting right there, 11% rather. So Tesla really driving this thing lately. Let's look at the performance of this versus the all-country world index, which is all I could think of to put against this because it's so unique. And you can see this is the all-country world. This is lit. So you're going to get a lot of volatility here. They both end up about 50%. So I think, you know, Scarlet, this is going to have to come down to whether people are really into this industry and the whole battery theme. But there are some opposing forces in the portfolio they have to watch out for.
All right, way to incorporate lit into your commentary there, Eric. All right, still with me is Jay Jacobs of Global X. Jay, what is the case for buying lit to capture a performance like Tesla versus just buying the star performer itself, Tesla?
Sure. Well, I think Tesla is kind of the poster child of the electric vehicle revolution, but it's 11% of our fund. That means 89% of the fund is other things besides Tesla. You have battery producers, you have lithium miners. There's a much bigger ecosystem that is supporting the rise of electric vehicles beyond just Tesla.
Yeah, and with that, one of our analysts was saying how, well, if the price of lithium goes up, that's good for the miners, but then bad for the people buying it. Are those forces working themselves out in the portfolio? How do you account for those?
It's actually kind of a misconception because lithium makes up about 3% of the cost of a battery. So lithium prices can rise, but you can still see falling battery costs because battery producers are getting more and more efficient. To give you some context, about 10 years ago, batteries cost about $1,000 a kilowatt hour. Now they're $100 a kilowatt hour. And lithium prices, have actually risen over that time frame. So battery prices are still falling even as lithium prices increase.
You mentioned that Tesla makes up 11% of the fund. How does it work when an individual stock gets this hot? I mean, this is a market cap weighted ETF. How does the ETF respond? How big do you allow any one name to get before you rebalance and take down some of that influence?
Yeah, so when you create an ETF, you always have to think about these things. Do you want to have just completely a free float market cap, or do you want to have caps on individual position sizes? The lithium space is a bit unusual because it's super concentrated. You have 5 lithium miners that produce about 66% of the world's lithium, and you have 4 battery producers that are kind of the controllers of battery production. So we have a pretty high cap on an individual position size because it's so dominant.
What is it?
It's about 20%.
Oh, so it can get a lot bigger.
Yeah, and another one you have is Drive. It's electric car ETF, and Microsoft is the biggest holding. So what's the case for Drive versus lithium, and why is Microsoft the biggest holding? That could be a knife quick.
By the way, Tesla is in Drive too, right?
Yeah, Tesla's in that one too.
So I think ETF investors need to get comfortable with this idea of intensity, right? This can work for factors, this can work for ESG, it can work for thematic ETFs. How much do you want narrow focus on an individual area, or do you want to be broader and own the ecosystem? Drive is kind of our broader exposure to the electric and autonomous vehicle space. So it's pulling in companies like Microsoft that build the cloud solutions for autonomous vehicle technology, and it pulls in the Teslas, and it pulls in the lithium miners. Lit is just that really focused approach of just those mining and battery companies.